there needs to be an increase in income for the population of this country that keeps up with the housing costs that are out there.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Mat Simmons of Sim Capital. He is the founder and CEO of Sim Capital. He's a real estate investor and with a firm headquartered in Wexford, Pennsylvania. With a career in real estate beginning in 2006, Matt has cultivated a portfolio exceeding 4,200 units, focusing primarily on value-add multifamily properties and affordable housing initiatives across various U.S. markets. And we're going to get into the differences in those affordability programs on today's show. Under Matt's leadership, Sim Capital has emphasized investments in affordable housing, particularly through the Section 8 program. The firm targets single-family and smaller multifamily properties in key markets across the country, aiming to have these properties cash flowing within 30 days of acquisition. The strategy not only addresses the affordable housing shortage, but also provides investors with stable, government-backed rental income. Matt, great to see you again. Welcome to the show.
Thanks, man. Appreciate you having me on. I'm excited.
Absolutely. Yeah. Today we're going to talk about affordability in the housing market. And you and I got to share the virtual stage on a webinar a little over a month ago, talked about some different segments there. And afterwards we were talking, and I said, you got to come on the podcast so we can continue this conversation and share it with the audience. So thank you very much for that. Before we get into that, Matt, share a little bit about your background. I know you've seen a lot, as I have, over the last couple decades in the real estate market. Talk about your background, how you got here today with Sim Capital.
So I've been in real estate almost 20 years now, 19 years. Next year will be 20 years. And I hate to say that dates me and ages me, but
oh, it definitely ages you. I could tell. Yeah, I can relate on that.
Right. I've started investing in real estate all the way back in 2006. I had exited a company with a partner of mine at that time, and was just looking for good places to put my dollars, my profits into, and just started buying my own real estate. At that time, just as my own investment for me and my family. Started with single family homes, small multi, duplexes, quadplexes, and kind of grew it over time. I actually started in the Section 8 housing world, and kind of learned the hard way that I shouldn't have done Section 8 from the very beginning myself. I'm a firm believer that Section 8 is not for beginners, and we can talk about that kind of a little bit more as we progress through here. But coincidentally, because I cut my teeth on Section 8 and subsidized housing, almost 18 years later, when we opened up our affordable housing fund within Sim Capital, it really helped us with that, because we knew the ins and outs of it already. We knew what not to do. We knew what the right things to do. And so while I said I learned the hard way, it definitely set us up for success kind of, almost 20 years later, when we started the affordable housing fund within the company. But over the years, I was able to build a nice little portfolio of about 300 doors or so from myself and my family, which led me to starting Sim Capital in 2014. And from there till now, we've done about a little over $700 million in transaction volume. We own about a little over $400 million in real estate currently. And that's comprised of multifamily as well as our affordable housing fund that we talked about a month ago on the virtual stage, which is why we're here today.
Absolutely. Yeah. Well, thank you for sharing that. And, I heard 2006, that was the perfect time to get started in real estate, right?
Yeah, right. I knew it all. I knew everything that was going to happen, so that's why I decided to do it. Right. Though the saying, it's better to be lucky than good sometimes, right? And honestly, I was lucky.
Yeah. So the market was kind of topping right then, so you got to ride kind of the ride up. So I want to talk about how Section 8 housing performed, during and after the downturn. But before that, Matt, let's go ahead and define some of this for the audience that may not be as familiar. Most of our audience understands like Class A, Class B, Class C multifamily, with Class A being, kind of the newest, highest rent, Class B, maybe you're talking about stuff that's 20, 30 years old. Class C,
Sure.
it's older. Those are typical, as properties get older, they typically, slide down the scale, although it's different in
Right.
different markets. Where does Section 8 housing fit into that, or how does it fit or overlap into that?
So I think majority of your Section 8 is all going to be Class C and Class D, which is, what we obviously the bottom of the barrel type of stuff, right?
Yeah.
And I only say that because it's not that it's bad, necessarily bad properties or poorly maintained properties. A lot of it goes to the areas that the properties actually fall into, as far as
Great point. Yeah.
demographics, income, stuff like that. Um, and so, yes, vouchers could be available on Class A or Class B properties. The be in the affordability spectrum when it comes to those types of properties, right? And so, the voucher system, the way that it works is they're not saying you can only be in this type of property, this class of property. It really comes down to a dollar amount and what's, where those the afford the or the voucher dollar amounts fall into for the tenants as far as affordability goes, right? And so a lot of times that's not going to fall into those Class A or Class B properties. So by default, they're kind of forced into those Class C or Class D properties and areas to make sure that their voucher covers the rent amounts and it's affordable for the tenant that holds that voucher itself.
Yeah, so let's step back or peel away one more layer. So the voucher you speak of, let's break that
Yeah,
down for the audience as well. How does a
sure.
voucher work? So I'm a potential resident. How do I get a Section 8 voucher? Do I apply to the program? Let's kind of walk the audience through that.
Yeah, so it's called the Federal Housing Choice Voucher Program, right? So it's a federal program that the government provides to help low income individuals or families get housing assistance. Even though it's a federal program, it's still administered on a local level. Typically,
Okay.
that's on a county by county level. Now, sometimes within that county, there's multiple housing authorities, right? And so what you have to do as a potential voucher holder or someone that wants to get approved for vouchers, you have to then apply to the housing authority that you want to work with and get approved for that housing voucher. And it's income based, right? And it's family size
Yeah.
based, right? And they take all those factors into play. The problem is that in a lot of the areas, there's a huge waiting list for these vouchers because there's not enough vouchers and dollars to be able to meet the demand that's out there. That demand
Gotcha.
has only increased over the last, well, really since COVID. That demand has
Yeah.
really increased over the last 5 years, and it's continuing to increase. And I've, I was doing some research probably 2 or so weeks ago to kind of get an idea on where the dollar amounts were at.
Yeah.
But and if I remember correctly, and don't quote me on this, we can verify this and you can cut it out of the show if I'm not right. But I think there was something like they're $3 billion short voucher program even to this date, even with the
Oh,
increase in funding that there has been year over year.
yeah.
And so that goes to show how much demand there is from people that want vouchers
Sure.
to the funding shortage that there is in the program.
Yeah.
Um, I am also, excuse me, I do also firmly believe that as with anything that's government related, this program needs an overhaul because I think it's kind of antiquated in the way that they approach it. I also think at the county and the local level, um, it's not administered as well as it should be. They're very understaffed, and there's people that take advantage of the program from the consumer side, the voucher holder side, as well as
Yeah.
from a vendor side, whether it comes from the inspections or the third party people they use for those inspections, kind of abusing the system, not passing properties when they really should because they know they're going to get paid
Mm,
for another inspection, so on and so forth. But those are
interesting.
all
Yeah.
things obviously we can unpack later. But it really
Yeah.
is administered, even though it's a federal program, administered at a local county level.
Gotcha. Yeah, and that's, you're not going to get any pushback from me arguing that a government program probably could operate more efficiently, and
Sure.
hopefully we're moving in the right direction. I think
Yeah.
a lot of things today, it's like we've reset at a new level, and it's we hear these, they're cutting all these employees from FDA or whatever it is, but a lot of these a lot of these federal agencies have seen like 100% increases over the last
Yeah.
10 or 20 years in their
Right.
size.
Yep.
Speaking of increases, we've seen rents increase
Hmm.
substantially, but we've actually seen the cost to own homes increase even faster due to not only the increase in price, but the increase, unprecedented rise in interest rates.
Yeah.
So that's all those things are driving, a lot of these issues. Um, Obviously,
It
Matt.
is, and
So, yep.
and
Please go ahead.
it's caused that affordability issue to
Yeah.
be to compound, exponentially,
Right.
right? The
Yeah.
the affordability for people to buy houses has dropped drastically over the last 5 years, 6 years, and I relate that to, people ask, well, where does that come from? Right. And so
Yeah.
let's talk about the typical cycles in housing, right? So typically a
Yeah.
housing cycle lasts about 7 years, right? 8 years. 2020, when COVID hit, we were on year number 11 of an upcycle, right?
Yeah.
Because it really started back in
Yeah.
2010, right? That rebound. And so 2020, 2021, we're in year 10 and 11 of an upcycle. And typically, had COVID not hit, and had they not artificially kept rates low and artificially
Hmm.
kept, the treasuries low, I think we would have saw a correction starting then. But that correction
Yeah.
never happened because the rates just dropped drastically to,
Yep.
2.75% and 3%, which made affordability, which made people able to afford homes. But
Right.
then that drove demand up because you had all this new influx of affordability from new buyers,
Yeah.
which then drove demand up, and it drove housing prices through the roof.
Yep.
And we still haven't seen that correct,
Yep.
even with the higher
Yep.
interest rates that you mentioned.
Yeah. So let me. This will be a fun discussion. So I agree with the 7 year cycle, but I think the real estate cycle goes in 18-year cycles, two seven
Hmm.
year cycles stacked. And I think the last cycle bottomed and began up in 2012, which would have ended the
Yeah.
7 year cycle in 2019, mid cycle slowdown.
Yep.
And then I think we're in the second 7 year phase. But I agree, the market's been perverted by these artificially low
Yeah.
interest rates that
Right.
have really, and we have to see, typically we see, and I think it's coming here probably in the next couple of years, we have to see some sort of correction because
Yeah.
if people can't afford housing and the market's not catching up, you know,
Right.
what's
Where do you
going to
go?
give? Yes, something's
Right.
got to
Yeah.
give with
Absolutely.
that. So if you're listening and you want to buy a house, I think there's hope for you, going
Yeah.
into the future. Um, but that's the problem, Matt. We have a shortage of starter homes. We
Yeah.
have a shortage of rental units. Now we've
Yep.
seen in the Class A space where we have a lot of our portfolio, we've seen an influx of supply,
Sure.
which has suppressed rents. But we
Right.
haven't seen that newer product filter down to the
No.
affordable levels yet. And we're going to start to see supply dry up here, in the
Yep.
next year and really into 2026 as supply
Yep.
drops off a cliff. Um, how does, I kind of mentioned this at the top of the show, how does Section 8 or subsidized housing typically, or how does it typically perform during downturns? Does Section 8, kind of hold steady, or does it outperform or perform better during certain areas?
So it definitely holds steady, but I also think it outperforms
Yeah.
the market as a whole, mainly because now, and we can touch on this a little bit, but I think
Yeah.
mainly because we see consistent year over year rent increases from the housing authorities.
Yeah.
Let's take 2023 into 24, for example, right?
Yep.
So 24 saw an 11.5% national average bump in fair market rents
Wow.
in the housing choice voucher program. And
Yeah.
if you compare that to what you typically see in a market rate rent, maybe you might see 2.5 to 3.5% rent increase year over year,
Yeah.
right? And so that itself shows that, okay, we see the government, the housing, the housing choice voucher program. They're saying, okay, we see the demand, we see that we have to increase rents to entice landlords to accept a voucher on their house, right?
Yeah.
Coincidentally, from 24 into 25, you didn't see that big of a bump. And in fact, in some areas, you actually saw a drop in fair market rents. And
Yep.
here's why.
Yep.
And it's the first time I've actually actually seen that happen.
Hmm.
But coupled with that, we saw a lot of these local, remember I talked about everything administered at a local level, right?
Right.
What we saw is a lot of these local housing authorities go away from a county-wide fair market rent
Hmm.
program to going zip code based. And so
I'm
they're
sorry, say
becoming
it
a
again. You
lot,
cut out there for just a second. For to go
yeah,
what based? Zip code?
zip code
That's what I
based.
thought you
Yeah.
said. Thank you. Yeah.
Yeah. So they
Yeah.
so now they've gone into a much more kind of like finite detail,
Yeah.
and picking and choosing what zip codes see a rent increase and then actually decreasing in some zip codes.
Ah,
And I
interesting. Yeah.
think I think what the reason you're starting to see that now is because in some areas, like take Cleveland for example, right? That's a big
Yeah.
market for us. We have a big
Okay.
portfolio in Cleveland. And up until 25, it was all countywide based. But then they went to a zip code based. What they saw is they saw, okay, landlords know the good areas of Cleveland, they know the bad areas of Cleveland. Even though they can get subsidized rents in the bad areas, they still want to buy other properties in areas that are considered nicer areas because they want to see that year over year price appreciation along with the rent appreciation, right?
Yeah.
And so what that does is they dropped fair market rents in the nicer areas and they increased it in the bad areas to try to entice landlords to put the properties in some of those areas.
Oh,
And for
interesting.
us,
Yeah.
yeah, and so for us, it's like, well, that okay, we understand that, but we still don't want to buy a property in some of these areas because we're not going to get the year over year price appreciation. And on top of that, people don't want to live there because you have higher crime
Yeah.
rates, higher poverty rates, stuff like that. So
Yeah.
I really think they're shooting themselves in their own feet and they think they're doing the
Yeah.
right thing and providing more housing by providing better rates in some of these other areas, but in all actuality landlords still aren't going to go there because they don't want to buy properties in those areas.
That's
um,
interesting. Yeah. So they're perverting the market and they're
they
trying to
are.
they're trying to affect the natural market cycles, but it's yeah, you can only swim so fast upstream, right?
It exactly
Yeah.
right. They can only do
Interesting.
so much,
Yeah.
and I really think it's going to ultimately. It's the first time we've seen that happen, or at least I've seen that
Yeah.
happen. And so I ultimately think
Yeah.
they're only going to end up hurting themselves and
Yeah.
ultimately providing less housing for people that need it because they're trying to manipulate things that way.
Yeah, that's interesting. And look, this is a complex problem. I live in Asheville, North Carolina. We've seen Asheville be one of the most competitive
Right.
markets in the country. And when that for listeners, if you're listening, you say, what is competitive? Like I know Asheville's nice. A lot of people want to live there. Competitive means the highest rent growth in the country. And part of the
Right.
issue, Matt, was that the city council restricted developers from coming in, even from land that they already owned, that they had a legal ability
Yeah.
to build on. They wouldn't issue that. So
They
with
wouldn't
that,
issue it. Yep.
yeah, so it led to an artificial supply
Depression. Yeah.
decrease or pressure on
Yep.
downward pressure. So you look at it, and as I'm listening to you, it's like, well, I mean, you could do opportunity zones to encourage
Yep.
developers in those areas while
Yep.
maintaining, the same rent growth program. But yeah, it isn't. You can't.
Right.
It's like you can only if there's no fire burning, you put more fuel on it. You still have to have something that's going to create
E-
that base state.
Exactly.
Yeah, but that is
Yep.
interesting, and I'm sure as you were mentioning before about people taking advantage of the system. I'm sure there are people in those areas that do lobby for that.
Sure.
And there's a lot of things that can push on that, which really,
Yep.
this is the debate you and I could go back and forth, and we could talk
Right.
all day on what role the government plays and should it play a role in
Right.
this and that. But that brings me to my next point, and it's you really can't build affordable housing today. You
Oh,
know, you
you
look at
can't.
these programs. I think here in Asheville, they were spending like over $300,000 for an affordable unit. San
Yeah.
Francisco, last time I checked, it was over $800,000
Yeah.
per unit.
Right.
I
Right.
think I shared this on the webinar, and we operate in a slightly different area of the affordable space, as
Sure.
you know. But
Right.
we're creating. I say creating. We're taking units that have a fair market value of about 150 to $175,000.
Yeah.
So we're about half of what some
Right.
of the lower range cost is to bring an affordable unit um, to market. Any
Right.
thoughts on like how do we solve this affordability crisis, Matt, with respect to not only providing as your group and our group does affordable units that are out there, but how do we encourage development of of units that are more affordable, across both, residential real estate as well as multifamily real estate.
I have this I have this conversation often, and I look at it as it's a two-prong problem that has to be
Yeah.
solved. One of those prongs is where you and I kind of come in, and from an investment standpoint, a
Yeah.
developer standpoint, a
Yeah.
landlord and owner standpoint.
Yeah.
But there's a second part to that equation, and it goes to an income standpoint from a consumer side.
Yeah.
And I think it's lost on a lot of people because as we're talking here, how can we make houses more affordable, right? We can do everything in our power to do that, but ultimately there still comes it's still an income portion of this that has to come into play from a consumer side, right?
Yeah. So
And I think that
somebody's got to provide it, but somebody's got to buy it or pay for it.
exactly. And I think
Yeah.
we can do all we can to bring costs down as much as possible, but we're still going to be limited on what we can do based off of what materials are going to cost, labor is going to cost, and any
Yeah.
sort of subsidy that we can get from whatever it might be, whether it's
Yeah.
tax subsidy, tax abatement, whatever it is. We
Hmm.
still have our fixed costs regardless that we're going to have, and we
Right.
can't break
Right.
through that floor, right? Because you have inflation that drives costs up year over year over year. So there still comes an income. Still, the other prong is the income standpoint, right? And we have to
Hmm.
figure out a way. And income has not kept up with pace of inflation. It hasn't kept
Right.
up with the pace of housing. It hasn't kept up with interest
Right.
rates. And so you still have this income issue that is a big factor in all of this affordability issue.
Yeah.
And so that's an area that you and I can't we can't play a part in that, right?
Right.
That's out of
Yeah.
our control.
Yeah.
But it is in the control of, let's say, government to a point and employers as to there needs to be an increase in income for the population of this country to that keeps up with the housing costs that are out there,
Right.
right?
Yeah.
Even with developers like us that are trying to bring housing prices down and kind of keep it affordable, we can only do so much. And I think that has been lost on a lot of people that talk about this affordability crisis that we're in, is
Yeah.
they're only looking at it from, oh, the developer side. Oh, we're greedy. Oh, and yes, we're not greedy. But we do need to make money. Obviously,
Numbers have to
we're in the
work. Yeah.
business of,
Yeah.
right. Numbers have to work. We
Yeah.
still need to be profitable. But there is that other prong that I think a lot of people look over, and you hear them talking about minimum wage and stuff like that. And this isn't a minimum wage issue. This is an income issue
Right.
for the general population, because
Yeah.
the general population, for the most part, the affordability it has escaped them. Even the general population, your middle class, your blue collar, he can't afford to buy a new house anymore nowadays.
No.
And
No, the
when
down
that
payment, the
population,
amount of time it takes to
right,
raise a down payment, the percentage of,
right,
yeah, it's insane. Yeah.
it is. And so when that population can't even afford a house,
Yeah.
we're in a real crisis. And that's where
Yeah.
where
Yeah.
we are.
Yeah.
And so I wish I had the answer on how to solve this whole thing, as I'm sure you did, because I think if we had the answers to solve all this, we'd be a hell of a lot wealthier than we are right now, and we could help even more, right?
Yeah.
But I don't think we have the solution to that because there is that income portion of it. We can do so much. We can buy properties. We can develop properties. We can take advantage of low income housing tax credits.
Yeah.
We can take advantage of the housing choice voucher program. But ultimately, it still comes to that income portion that
Right.
isn't being addressed yet, and
Yeah.
that's the biggest problem.
Yeah. No, I agree. And yeah, it takes economic growth. It's the same thing that they've been talking
Right.
about with, lowering the budget deficit, but we have to grow our way out of it essentially. And
Right.
I'm gonna play devil's advocate here, for both of us.
Yeah.
Do you think that these programs, like, some of the tax abatement programs we have, some of the Section 8, do you think it's actually causing harm in some ways?
Um, I'm going to say yes.
Yeah.
I think that there's always
Yeah.
positives and there's always negatives,
Right. Yeah.
right? I think part of that can be some of the negative, some of the harm that can be caused is what I touched
Yeah.
on earlier, where you have people that are taking advantage of the situation, right?
Yeah.
They're taking advantage of the program, which ultimately takes away opportunity for other people that actually need it,
Yeah.
right?
Yeah. Or
Or
like you
you
said,
have
the program's perverted where they're,
right
raising in some areas and yeah.
and dropping in others,
Yeah.
right? And or you have that just stay in this program because they know how to milk it and they can keep their, they can keep
Yeah.
that voucher approval and their income
Oh,
just
yeah.
under that threshold, right? And
Interesting.
so they're
Yeah.
forever on this program and forever taking advantage
Yeah.
of the offerings that there are.
Yeah. A
And
double-edged sword of
from our
welfare.
standpoint, it is,
Yeah.
and from our standpoint, the way we look at Section 8 is it's not, it shouldn't be for a forever thing, right? There should be
Yeah.
caps on it, in my opinion.
Yeah.
You should put a cap on the number of years someone can actually
Mm,
collect a
yeah.
voucher, because that forces them. But alongside that, there needs to
Yeah.
be some, and this is where I think the overhaul needs to come in. There needs to be some community or countywide outreach effort with these voucher holders to help them educate themselves to get out of the situation that they're in,
Great point.
right?
Yeah.
Job creation,
Yeah.
education, trade, stuff like that,
Yeah.
to help these people kind of level themselves up and out of this program. Which
Yeah.
they put a yearly, if they put a timeline cap on it and they required these people to take part in this education, could really help bring these people out of this welfare program, which opens those vouchers back up for other people that need it, right? And,
I
and I
love that. What a great idea. Yeah.
and so I think if they implemented something like that, it would go a long way in helping to solve this problem and provide them the housing that's needed, but they don't. They just give
Yeah.
these vouchers out, and yeah, people have to qualify each year for them. There's no cap on how long they can be on the program. They just keep taking
Yeah.
advantage of it over and over and over again. And ultimately that makes it harder for the people that may have done really well for themselves, but find themselves in a tough
Yeah.
spot right now and really need that voucher, but they have to wait 2 years for a voucher to become
Yeah.
available.
Yeah.
And
That's
so
an excellent point. Yeah.
that's the harm, I think, at least
Yeah.
with the section of the industry that we're in, with the
Yeah.
Section 8 and the vouchers. I really feel that downside and the harm that's being caused that
Yeah.
isn't being addressed and fixed.
Yeah, you almost have a perversion of incentives, like you said. You're like,
Mhm.
well, hey, if I just make a little less money this year, I'll still get this. So ultimately,
Right,
I'll actually bring in more revenue. It's like,
right.
Michael Schellenberger wrote a book called San Francisco, and
Yeah,
he lived in San Francisco. He was a progressive, and he's like, well,
yep,
how do you solve this problem, of homelessness and drug
right.
addicts? So he went around the world, and what he ultimately came to, which is interesting, he kind of changed his perspective, is that you need a carrot and a stick. You offer these
Yeah,
programs, but you have a stepwise progression. So you say, hey,
yep,
we'll give you a place to stay. If you get sober, you don't have
right,
to share a bedroom. You can
right.
get your own. If you get a
Yep,
job, you can get your own apartment. And like you said, you have these sequential, stepwise
yep,
incentives there. So you could take a
yep.
program like you all participate in, Matt, and you could take somebody that's in it and lift them out instead of keeping them in there. That's an
Exactly.
excellent point. Yeah.
Yep,
I'm glad I
yep.
asked the question. I don't know where this is going to go, but yeah, it is. We
Well,
think about, yeah, go ahead.
it made me think too, because most
Yeah.
people don't ask if
Yeah.
these programs cause harm. We know they do good, obviously.
Sure.
We
Yeah,
know there's a big
absolutely.
need
Well,
for it.
we know, yeah, we can
But
point to the people that they help. Absolutely. Yeah.
right, 100%. But I've never actually had anyone ask me, do they also cause harm? And
Yeah.
I that's my answer. I firmly believe that they absolutely
Yeah.
do, and this is how they're doing it.
Yeah. Yeah. No, that's no, and thank you for that perspective. I look at the tax abatement programs, and there's some pushback. We do a lot of these projects in Houston. People say, "Oh,
Yep.
this isn't fair," but because we're not getting this tax revenue.
Right.
But yeah, we're not getting tax revenue, but it makes the project economically feasible for us and our investors. It
Right.
creates
Housing
effectively
too.
instant affordable housing for
Right.
those that are there, and it provides it provides very high quality units in a market
Right.
rate stepwise increase that
Right.
works for that. So I think we need more innovation like that. Asheville does public
Yeah.
private partnerships. I mean, it's like,
Yeah.
who's gonna build it? Do you
Right.
want I don't think we want the government building housing. I think we want
Well,
private developers doing it.
I I think government has proven that they can't develop housing well. You know what I mean? Let's be
Yeah.
honest. They've
Oh,
tried
yeah.
over the years, and
Yeah.
it's always an epic failure, which
Yeah.
I agree. I think it needs to be
Yeah.
a private
Yeah.
a private solution, basically,
Yeah.
right? It
Yeah.
needs to be the private sector that's doing it, with the government providing some incentives for sure to
Yeah.
make it possible, like you said,
Absolutely.
economically feasible.
Yeah.
But it definitely needs to come from the private sector.
Yeah, absolutely. I suspected we may be on the same page with a lot of that stuff. But yeah, I love these discussions because we have mobile home parks as well,
Hmm.
and I'm a kind of like energy. It's like all of the above.
Yeah.
It's like, hey, let's
Right.
get mobile homes. Let's get
Yeah.
affordable. Let's do Section 8. Let's get tax
Yeah.
abatement programs. Let's lower restrictions and
Right.
all the red tape so we can get more units at a cheaper price going
Right.
into markets that need it. We just need more housing basically any way we
We
can
do.
get it. Um, so
100%.
let's have some more fun. What do you see happening, over this, whether you say like this the second half or this next phase of the real estate cycle, Matt? Like what do you see unfolding here over the next like 5 to 10 years? We got a lot of variables out there. Um,
Yeah.
and what do you see happening? I know we have again, it's really challenging with the Fed and tariffs and all that. But
Yeah. And we
let's look
definitely
into our
have
crystal balls.
some additional factors coming into play that we haven't really had to deal with before.
Yeah,
Um, you know, uh, I would say so. So I'm going to kind of give you a short term, midterm, and long term outlook here of what I see
terrific.
happening.
Yeah,
I think short term, and when I say short term, 6 to 24 months, right? The next
yeah,
6 to 24 months, I think going to see interest rates for the most part go sideways for the remainder of this year. Probably start seeing them come down. When I say interest rates, I'm talking about mortgage rates, not
yeah,
necessarily the Fed funds rate.
yeah, yeah,
But I see interest rates with mortgages ultimately going sideways for the next 4 to 6 months, and then ultimately starting to trend down towards the year. What that's going to do, in my opinion, because we're already short on supply, that's going to increase demand from a buyer perspective because that brings back affordability.
yeah,
Unfortunately, I don't think we're going to see a large influx of supply that's going to be able to meet that demand, which is going to ultimately drive home prices even higher, which we don't need. But ultimately, that's economy, right? That's
yeah,
economics 101, basically.
yeah,
And I think interest rates are going to continue to trend down over the next couple of years, as that happens. The tariffs have me a little perplexed, I'll be honest.
yeah,
And when I say it has me a little perplexed, I firmly believe what's going on is long overdue. And I firmly believe that we needed a change. We needed to stop being, the worldwide funder of everything. And we needed to kind of bring back manufacturing. We need to bring back purchases domestically. And I think short term, we're gonna feel some pain from that. I mean, we saw it over the last 45 days already, right? With
yeah,
the market being down 1,500 points one day, 1,800 the next, down 1,200 the next. I mean, you
yeah,
have that volatility, right? And that
yeah,
causes whiplash for most people because they're
yeah,
they're operating off of emotions, right? And I
yeah,
get it. Um, but ultimately, I think things are going to settle down a little bit, and we're going to start seeing ultimately the goal that he wanted to achieve with the tariffs
yeah,
and with the overall outcome. And I think that's going to help stabilize the economy.
yeah,
I don't care what people say, the last 4 years, the economy has not been good. You can't have a good economy when you're operating at 9, 10, 11% inflation rates.
yeah,
I think it was all smoke and mirrors, to be honest.
yep.
And I think the uneasiness that we're seeing now, which may have been the tariffs may have been the catalyst to that action, but I think that's just the fallout from the smoke and mirrors over the last 4 years.
Yeah, it's hard,
Um,
I mean, oh, sorry, go ahead. I didn't mean to.
no, go ahead. No, go ahead.
Yeah, I mean, it's tough, right? You look at the actual job creation, you look at who the jobs are
Mhm.
going to, you look at the government jobs,
Right,
immigration, the
right,
the amount of money, the deficits we are running, the spending,
right.
anybody, it's like your neighbor can borrow a bunch of money and look like they're rich for a couple years, but eventually the bill comes
What
due.
catches up? Exactly.
Yeah, and I feel
Yeah.
like we're like a junkie, going through
Right.
rehab right now as a
A
country.
hundred percent. Yeah.
Yeah, so it's like, well, who do you blame with that?
Right. Right. I agree.
um,
No,
yeah,
and we can go down a whole rabbit hole with that,
yeah, yeah.
and
Let's.
I
Yeah, I know
could,
you and
I,
I. Yeah,
I could get on my soapbox, but I won't go there because I'm
We'll
sure
stick
people
we'll
don't want
stick
to
to
hear
housing
that.
today. But when you and I are
Right.
sharing a bourbon or something, we can talk
Yes.
about that.
Please.
But we're
100%.
gonna Matt, we're gonna have to make this a regular thing, maybe every year, have you come back on.
I'd
But
love to. Yeah.
yeah,
Yeah.
but we're wrapping up our time. I'd love share a little bit more
Yeah.
about Sim Capital. I know you're up in
Yeah.
Pennsylvania, not too far from where I grew up in Maryland. Talk
Yeah.
about like what markets you operate in and how
Yep.
investors and our listeners can learn more about what you guys do.
So we are technically considered a private equity real estate fund firm. We do it on both a fund basis and a syndication basis. We primarily, from the start in 2014, were heavy value add multifamily focused firm, where we would go in and we would buy, heavy value add Class C plus B, B minus properties, renovate, increase value, stabilize them, and sell them. Coming out of COVID, is where we really started dipping into the affordable housing space, and we've been really successful with our affordable housing fund. And so those are our two focuses. The goal is to continue our growth. We want to get to about $1 billion or so in assets by the end of 2027. And we're sticking with the value add multifamily and the affordable. We see really good opportunity in both of those spaces, as well as we actually do offering from a debt perspective. We started a debt fund recently because we see some good opportunity
Yeah.
there with the way the market has been. But all of that can be found at simcapital.com. You can schedule learn more about us. You can hop on the website. You can request to schedule a call with our investor relations team, ask any questions, talk about any of the offerings that we have, talk about our history, talk about where we're moving forward in the future. And you can me out on social media as well. I'm all over Instagram and YouTube and Facebook and all the channels.
Beautiful. And we'll be tagging you here on this podcast here. And that's Sim Capital with two M's. We'll
Appreciate
have that link in the show
Yeah.
notes. Check out Sim Capital's website there. And Matt, really enjoyed catching up with you again here. Thanks for your time and sharing your perspective and thoughts with the audience.
Man, I appreciate it. It was a blast. I always love doing these things when we can connect on the same page and talk about how to fix problems in the world.
Anybody with an American flag on the wall is I'm a fan of. So appreciate that.
I appreciate it.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.